Mainstream financial outlets want to paint all meme stocks or Reddit-fueled stocks as jokes and junk, just elaborate sort of pump and dumps. Now, I don't agree with every investment thesis on every meme stock, but there are times the crowd really does get it right. Well, that's what we're going to talk about today. Hi, I'm Matthew Carr, Chief Trend Strategist at the Oxford Club. Thank you for watching this episode of Market Trends. If you're new here, be sure to hit that subscribe button and turn on notifications so you don't miss my best trading ideas, which I share here each and every week. Now, I've written recently that every company wants to be a meme stock. It's one of the easiest ways to raise capital in these markets.
Oh my God.
I know analysts and investors that despise the whole movement, but I really do think there are moments that they hit the nail on the head. One of these is Wendys, ticker symbol WEN. Though to be clear, I personally would hesitate from throwing it into the true meme stock category. I mean, who doesn't love Junior Bacon Cheeseburger or Biggie Fry with a Frosty? The company is the third largest quick service restaurant in the world. Now, Redditors helped drive shares to new 52-week highs recently, but there are really sound reasons for it, and at least in my opinion. You have an influx of vaccinated diners. There are new menu items and a partnership with Rick and Morty.
That's the breakfast baconator, Frosty Chino, and honey butter chicken biscuit. Chicken biscuit's a bruiser, Morty. Do not mess with that guy.
Which gifts us with the genius of the Pickle Rick Frosty. As a side note, if this year there was no Pickle Rick item, I would consider shares a sell because that would be an idiotic movement on their part.
I'm Pickle Rick!
But this is the perfect time to talk about Wendys with Global Rick and Morty Day this Sunday, as well as the launch of the 5th season. So this is all a sound investment thesis, in my opinion. But here's the difference between Wendys and true meme stocks. Let's look at the company's share price movement over the past 5 years. That's a nice chart. In fact, quite alluring chart. We have a steady incline, save for the market collapse in February to March 2020, but shares bounce back and continue their measured move higher. And shares are outperforming the S&P 500 during this 5-year stretch. Now, let's compare this to the charts of other meme stocks like GameStop, AMC, BlackBerry, Costco. All of that's the telltale sign of the meme stock crowd influence. You have the shares surging to these new highs, followed by a cascading collapse. And then you see traders, keep trying to push back toward those lofty highs, but kind of failing. By comparison, Wendys is merely a tame, solid performing investment. It's beat earnings expectations in 3 of the last 4 quarters. And over the past 90 days, the consensus earnings estimate for 2021 has risen from 68 cents to 74 cents per share. Not to mention, earnings estimates for 2022 are increasing. The company pays a quarterly dividend of 10 cents, which, isn't bad at 40 cents, a little bit more than a 1.5% dividend yield. And it has a price to sales ratio of 2.95 currently, which is lower than McDonald's, Yum Brands, the owner of Taco Bell and KFC, Shake Shack, and Restaurant Brands, which owns Burger King and Tim Hortons. So the consensus price target on Wendys shares is a little more than $26. But North Coast Research has a price target of $30, which I believe is more in line with my outlook, which represents a 25% upside from around the $24 they're trading today. You may hate meme stocks and the Reddit crowd, but when it comes to Wendys, I'm going to steal a tagline from one of its competitors and say, I'm loving it. Well, I'm Matthew Carr, Chief Trend Strategist for the Oxford Club. Thank you for watching this episode of Market Trends. For more information like this, be sure to go down to the description and sign up for my free e-letter. Until next time, here's our returns.